Good morning, all the team members. I am going to brief you about Orderflow and the charts we use in Orderflow. I'm going to show you how it works. This is the Orderflow plain chart of Bank Nifty. So this is the plain chart. We have to understand that the market moves in a specific direction. It does not go according to the whims and fancies. Yesterday, you can see from third, it made a bounce from this blue line. It came back and retraced from blue line. So these blue lines, near the blue lines, the what smart buyers are present, and that can be verified through order flow. However, we will go to today's trade. I'm expecting the market to drop to this level, reach this level. Today, yesterday's low, it has to break or it has to rebound from that particular point. So we are going to examine that with the order flow charts. See, this is today's live market. From here, the 5th, you can see the date. From there, the market took a dip and went up. We didn't trade in this session. In this part, we didn't trade because I was expecting the market to rebound from this blue line. So we took a trade somewhere here for 100 points. First trade was 15 point stop loss was hit. I have posted in the WhatsApp group and the Telegram group. And after that, we took the first trade was taken at 45,500 put. We'll check whether it is 500 put or 400 put. 45,500 put was taken at 300 with a target of 340 and 405. The trade was entered somewhere here. What time? That is around 9:30. We will go and see what the order flow indicates at 9:30. So here you can go back to the order flow charts. See, in this candle, we cannot understand who are the sellers, who are the buyers, what is the order size. We cannot understand anything in the plain charts. The indicators will only indicate about the past, not about the future. If I'm correct. So it will never indicate the future. So we have got an advantage over the indicators, that is we know where the orders are. Let me show you the first candle for better understanding. See, this is the first candle which took a dip. I will change it to 1 minute candle for your understanding. It will be very more clear. See, the first candle, second candle, why we don't trade in the first candle is first 5 minute candle we avoid unless there is a big orders. I will tell you what the big orders are, where the smart money is located in the training period. But here you can see one order is here. That was a previous day order that is covered 107, and the delta is 467, 461 on the selling side in the first candle. So the first candle was pretty big and there were no much orders. All these zeros are called zero zones. See, there is a mixture of reloading and selling in these orders here. This 171 is reloading, that is trying to push the market up. This pure red red color is pure sell order. They are all aggressive traders because there is no order on the other side. So this is not smart money. Smart money will be formed with big orders. You can call this a cluster order or something like that because we have orders on both sides at different places. And that is how the next 5 minutes panned out. So this is the place where we took a trade, 935. We didn't trade on the upside and the trade was given on the downside. First, I took a trade somewhere here at this candle because okay, why I took a trade, I will tell you that also. I was expecting the market to go down because the buy order buy delta you can see is 372 here. You can see it correctly here, and the sell order was 7 267. It was increasing from the previous one 263 to 7 263 to 267. And the same here, it was 372. Previous candle was, this is the first 5 minute candle, second 5 minute. Although it is very volatile, 289. 289 to, after such a big candle, there will be a follow through. If there is a follow through, only we trade. And the number decreased from 600 to 372. And again, it increased to 434. So the delta, what we see here, you can see the second letter delta. Delta is changing with every candle. It should support and increase or decrease abruptly for us to change. See from here, minimum delta was 790, 701 and it decreased to maximum delta was 701. That is the delta, higher the better the trade. So it decreased to, by the end of the candle, it decreased to 0 and it settled at 456. So the next candle, it immediately turned to red. So from this 436, it turned to red. This can be compared with this number 34, the minimum, the max delta. Here, this number from 101, the max delta decreased to 34, and the delta itself became negative. This is where the trade was prompted. Without this kind of numbers, we don't trade with small numbers. And now I'm going to see, since the COT ratio is 5.69. See, for example, here COT ratio is 0.91, 0.72, and it is here even lesser, I think, 0.72, and here it is 0.46. 0.46. What is the understanding there? That the sellers are less, that the sellers are increasing and the buyers are decreasing. So what happens in the next candle after 520? We took a trade somewhere in this candle, somewhere here, even the options were 300. And first time the stop loss was hit of 15 points only. The target was the same for both trades. It was 105. The trade entry was 285. The target was 300, 405. So next what happened, you can see. We took a trade somewhere here based on the numbers here. Part ratio is bigger than the previous number, 0.46, and here it is 5.69. So we have confirmed that there is a trend reversal and the market is going to go down. And that is why we took a trade here. When we took a trade here, see what happened for yourself. Market went down nearly 100 points in the same candle. And again, the buyers were selling to push it up. And that is why the seller's cut ratio is less. Though the buyers were selling, trying to push it up, the delta was still negative. So we continue to hold the trade. And again, the market was fluctuating a little bit, and then it fell to from 45,400, it fell to 45,275 or something. 45,300, from 400 to 300, 100, 200, 100 points we got, and we exited the trade somewhere in this green candle down under. So where the target was around 305, 405. So that was supported by the order flow chart. The numbers, the cut ratio. I will show you how it looks, making it smaller. See, we exited the trade somewhere here in this area. So after that, the market went up and consolidated and again came down, but we didn't take any trade on the upside. We concentrated on a trade on the downside because we were expecting it to come to the buyer's zone. Only when it comes to the buyer's zone, that is when smart people, smart money is located, the market will move up. As I told you, smart money is located somewhere here, and we can confirm that on order flow. And somewhere here. This is what I showed you here is a small area of smart money, and this is a big area of smart money, big demand zone. Demand zone. That is why the market went up like this, 500 points from 49, 44, 900 to 45, 500. So it gave nearly 500 point more day before yesterday. That was confirmed after this. See, the day started with a red candle, took a dip, and then started reversing from this point. So we took a trade somewhere here and made this 500 point. We didn't trade on the downside. Scalping can be done, but there will be huge decay of premium, and that is why we didn't take a trade on both sides. And after that, there is pure decay of whatever you see. This today's candle. This was only around 200 points. So after that, the market is moving completely sideways. These kind of spikes will not be traded. This is a live market. You can see. I will again show you what is happening. Okay? Last candle. See, the delta is negative. The candle is going up, and you can see the delta candle. The candle itself is green, but the delta candle is red. This shows us that this is a false breakout. See, the candle is green. Here also the candle is green, but this is called the delta candle. What you see here, that is still negative. So this is a false breakout. So for that to be confirmed, there has to be a big delta here along with a green candle followed by a green candle. See, this is one true example which you cannot see on the regular charts. Candle's color is green, but the delta candle is red. These are the things which will cheat the retailers. Market will go up, but I don't think it will go up very strongly because the numbers are not strong enough. The delta has to be more than 500, 600, and then only the market is going to go up. In a sideways market, like 100, 200, if delta is 100, 200, the market will push up some 10, 15 points and again come down rapidly. In that way, the retailers will be trapped. And if no somebody is not putting stop loss, they will lose a part of the capital because sometimes it might simply like fall like a stone. So stop loss is essential, and all this is essential. This is the daily candle of the daily candle chart, and this is the today's candle. Candle is today's candle. So you can still see so many orders pending. This most of the orders will be covered. Most of the orders will be covered. But the trading uh, zone for today will be 45 to 50 to 45 350. That is where it should end today. I will tell you how I found all this, how I can tell the numbers and all those things in my course session. This is all for now. If you have any questions, you can um, ask me during the course session. You can also share uh, the news with your friends and add them to the WhatsApp group. And if it is helpful for you, or if they would be interested to join the course, you can tell them to join and register. The course will be scheduled within 10-15 days. Of course, we will start a second batch if needed. Okay, guys, thank you for now. Have a nice trading session. Good day.